Okay. Now, there are 4 waves in every single cycle. 1, 2, 3, 4. Okay. Wave 1, wave 2, wave 3, wave 4. Now, wave 3 and wave 4 relationships refer to how wave 3 and wave 4 relate to the first part of the wave. Above start indicates that wave 3 starts, in other words, that trough starts at a level that is above the start of the full cycle. It's as simple as that. So in this case, this would be an above start pattern. Okay? What would a below start pattern look like? Let me draw one here. Wave 1, wave 2, wave 3, wave 4. That's a below start pattern, because there's the start and there's the start of wave 3. Okay, that's a below start. This is above start. The same thing applies to wave 4. Above peak means that wave 4 starts at a point that is higher or above the peak of wave 2. Okay, so this is an above peak. I mustn't write using this thing. That's an above peak, and this is a below peak. Let me draw a pattern that is below start but above peak. There is a pattern that is below start. Start of wave 3 is below the start of the pattern, and it is an above peak. So the peak, the top, is above the peak of wave 2. You'll start noticing many other patterns that you find in general technical analysis. This is an expanding triangle. Okay, so that's really interesting. In fact, you can create all the patterns, including a double top is a bull. I think it's a bull E. It's a typical double top pattern, and so on. Anyway, but I'm digressing. Okay, I hope that that answers that question. Okay. Then, all right. So let me turn that off. Those are sentient wave 3x4 relationships. So you can define your trading matrix very specifically. You can say, I want a trading matrix that trades wave 4, negative underlying trend, but only when wave 3 is below the start of wave 1 and wave 4 is below the peak of wave 2. Okay, so you can be very specific. Personally, I wouldn't recommend being too specific, particularly when you're starting to learn about trading matrix. I wouldn't create very specific trading matrices. Okay, I would recommend you stick to the basics. And you should also explain the wave bear types. Given that our R is up, I think that's something I must come back to next week in explaining the wave bear types. I want to very quickly finish the sort of basic introduction to working with trading matrix. This is a trading history that has been built with a full trading matrix. How do we see what would happen if we didn't use a full trading matrix? Very simple. You click on this button here, Adjust Matrix. Okay, the trading matrix that was used to build this trading history then pops up. Okay, we can then edit the trading matrix. So I know that I don't want to trade wave 1 with a negative underlying trend. I know I don't want to trade wave 2 with a positive underlying trend. Okay, because it lost money. Let's also leave out that wave with a neutral underlying trend. Wave 3s, I don't want to take either of them with a negative or a neutral underlying trend. You see what I'm doing? I'm reading them from here, and I'm transferring them down to the representation of the matrix down here. Wave 4, below start, below peak. I'm treating them all the same. I'm not going to get complicated. I don't want to take wave 4 and a positive underlying trend, regardless of whether they're below or above. I also don't want to take wave 4 with a neutral underlying trend. Okay? Now I've edited the trading matrix. Now I click on the OK button, and Sentient Trader goes to the trading report that it has, and it produces a new trading report using the trading matrix that you have just generated. If you click on the equity graph, Now that is an equity graph that you would be interested in trading. Okay? And that is the equity graph produced by an approximation of using the matrix that you've now designed. It's very important that you understand that it uses an approximation of the matrix, because it built the original trading history using a different trading matrix. So there is one final step to the process that you really should do for your own peace of mind, and that is you now need to build a trading history using this exact matrix. Doing the editing like this enables you to see an approximation of it. But it's not exact. If I click on the Save to Chart button, it will actually change the trading history on the chart to reflect the trading history generated by the new trading matrix. Okay, so I can click on Save to Chart, and it then adjusts the trading matrix and the trading history of this particular chart to reflect that new matrix. Now, you should do a final step in the process. I go File, Save As, and I've called that one Full, which for me means that is the full trading matrix. I then build one which I call True, and I go Trading. I clear all trades, orders, and action signals. I get rid of everything. It removes all the trades. Everything is gone. Okay? Now, my Sentient Trade matrix is the one that we just built when we edited it. There it is. Okay? And again, I haven't got complicated with any of the details. I'm staying on the basic tab. Say OK, and then I go Trading, Build Trade History. Would you like to clear the trading journal? Yes. Start the build of the trading history, and I do it again. And let's stop that. Another half an hour, switch to the one that I built earlier, the True matrix, and here is the trade report of using that True matrix. In other words, the trading history has been built again using that trading matrix. And if we look at the equity graph, there it is. That's an impressive equity graph. It looks good, and that is how you work with the Sentient Trading Matrix. Okay, it took me a little longer than I hoped, but I hope that that answers many questions. Let's see. Let's now turn back to the chat window and take questions. All right, where am I? Let me just. How do you avoid simply curve fitting with the matrix? Well, that's why I wouldn't recommend that you specify a too specific trading matrix. The whole question of whether it's whether one is curve fitting a market or not is a fairly complex one. It's been something that has obviously been of great concern to us. We have conducted a large number of tests. Where we have, in fact, I can show you graphs from. Let me show you this. Okay, I don't like this program. I can't ever see it. We conduct constant tests to see to what extent is the building trading history process really real and true, and to what extent is it curve fitting. If the more specific you get, obviously you are going to end up starting to curve fit. In other words, you are adjusting your trading matrix to the very specific conditions that happen to be there at the time that you were building the trading matrix, which is why I don't recommend building very specific trading matrices. You can build extremely specific trading matrices. The capabilities there, you can do it if you like. I would recommend not being too specific so that you avoid building a trading matrix. This is a test on a 1-minute chart, trading the 1-hour cycle. We built a trading history of just over a week and designed a trading matrix. This is a very early test that we did way back in April. And we built a trading history using the trading history building process, and we generated a trading matrix as a result of that. And you can see I've labeled this chart. This period consists of a trading history built retrospectively. up to the 16th of April. So obviously, there was a strong danger that it could have been curve fitted. We then ran it in real time. Actually we're still running it, but every week we have a look at the results, and you can see here's the equity graph from the week where the building trading history occurred, and then here is the equity graph for the 2 weeks and a little bit following that. I think this indicates that this particular matrix was not over curve fitted. It continued to work as we continue to work with new data. We are constantly doing research into this and so on. So it's an ongoing thing, but certainly curve fitting something you want to avoid. And to help avoid it, you should really only set fairly simple trading matrices, and not only fairly simple trading matrices, but matrices that make sense. In other words, if you find that wave one and a negative underlying trend, works with the previous bear B pattern, that's probably a complete chance event. You need to look at the statistics and say how statistically significant is that. Okay. Is this also able to be transmitted on auto trading later on with the trade matrix? Yeah, when auto trading is enabled in Sentient Trader, the trades that it takes are going to be entirely